Welcome everyone to the Crush the Premium Weekend Edition. So we, of course, unless you've been on vacation, somewhere very quiet without internet or phones or television, you've definitely heard about the VIX here, having had a massive spike, but really the most short-lived spike we've ever seen. The biggest reversion back from a very high level of VIX down to really almost pre-spike levels that we've ever seen. Historical drop. So we can see back in 2020 we had much more durable kind of spike, went up, lasted a little bit longer, but then we had volatility echoes afterwards, right? So sort of pullbacks and a run up again in VIX, pullback, run up again, pullback, run up again. Of course, those were different conditions, right? We were dealing with something we didn't understand. We didn't understand certainly how durable the issue was going to be in terms of the pandemic. And so it made sense that there would be kind of a reverberation in equity markets being weak and in volatility and fear markets maintaining some sort of higher level. Eventually they gave it up. And of course, this year we've seen very low volatility, which is probably part of the problem. We saw a realized volatility of very low, of sort of mid single digits in the S&P 500. And that proved to be a little bit too low, right? There's sort of almost nothing going on. And then we entered into that seasonal part of the year where VIX starts to tick upwards, and we just went bananas with a number of factors that we don't have to get into again, as we talked about them the other day. So at the time, of course, it seemed like the great unwind was just beginning, but it wasn't to be. Things really quieted down very quickly. We'll talk a little bit more about volatility at the end of this show. So we can see last week we had a number of very positive days. Volatility really got sucked out of the market, intraday vol, day-to-day vol. We can see the moves on the week, huge moves. Dow a little bit more muted. Dow, of course, was hanging in there a little bit more, some healthcare, some sort of more defensive things in there that kept it somewhat resilient during the sell-off. Of course, the NASDAQ taking the brunt of it, NASDAQ 100, S&P 500, big comebacks in those names. Russell 2000, not as big a comeback. So interestingly, we'll see in a moment on a technical basis, it still has a little bit of work to do. And so that might be a vote that perhaps we don't see as drastic a sort of rate cut sequence as people had maybe hoped before, is at least the way I'm seeing it. So we can see across the board, market sectors, all positive. Just a massive comeback party in so many areas. Semiconductors, the big winners, almost 10% up last week. Technology, some banking, transports a little bit. We can see all the way down into even defensive areas, healthcare, things like that. Utilities even up slightly on the week. That was the power of that particular rally. Cryptocurrencies, Bitcoin definitely bouncing back from that $50,000 level, but nothing too big to speak of there. Precious metals, gold, all-time highs. We're in gold in our portfolio. Fantastic run we've had here. I think any way you look at it, people are going to be spending. Whichever administration comes in, it's going to be a spend fest. So there's no putting that genie back in the bottle. So gold continues to look okay. And then, of course, you see Treasury yields pull back last week as well. So we've got our Dow right back to the top of this Bollinger Band. S&P, what a comeback. Look at that, from almost 5,100 all the way back through, and really ignoring all levels. Any kind of level you threw at it, doesn't matter what moving average, blasted right through all of them. These are weekly charts, keep in mind. So we're actually a stone's throw away from all-time highs again, incredibly, after all that. NASDAQ as well, big comeback on the semiconductors. So the areas, the AI bounce happened. Some big bounces from NVIDIA, which reports very soon, in about 10 days. We'll get some numbers out of them, so the whole world will be watching and waiting for those numbers. I don't think anyone has any doubt that they'll be good numbers. A lot of companies come out and said, listen, we are spending CapEx on AI. I have some sort of anecdotal evidence from people in the industry as well, in the tech industry, saying they just cannot get their hands on enough. There's just not enough around. and there's just kind of a scramble to buy. So from that perspective, the narrative, the theme is still very, very strong. The question is it going to last? Are we going to get this sort of moment where companies that have been saying we're spending, like a Google, might pull back and say, listen, maybe we've done enough for now. And we'll see if that can kind of reinvigorate this idea that there is a lot of spending going on with not a lot of return on investment at this point for many companies. Except Meta. I keep talking about companies like Meta, which have been doing absolutely fantastic. Been a really, really great call of ours. S&P Daily, we've come all the way back to this trend line here. So if we trace this trend line going all the way back to November to October of last year, when we started this next leg of a massive rally, we are right back there again. So this is the moment of truth. There have been several moments of truth, but here is yet another large moment of truth. This getting back into this channel here really puts us in back in bull market territory. That is for sure. Here we are on a daily chart as well, but just kind of zoomed in a little bit more. We can see this channel here, which is not the one we were just looking at, but we had that retest, complete failure down to this kind of support zone. A lot of people were looking for 5,000. I thought we'd probably get down to around 5,000, maybe dip a little bit below, but it wasn't to be, and we just blasted through every moving average imaginable on our way. Even right in here on that 50-day moving average, just sliced through everything. So this was an incredibly amazing rally. Through this trend line here, if we look at the 195-minute chart, I'd like to look at that on a short-term basis to kind of pick up shorter-term trends, shorter-term reversal spots. A little bit of a double top in here. This would take us right back to, the all-time highs, which would be amazing for bulls. But maybe we have a little bit of trouble in here. A lot of gamma, as we're going to see in a moment. Wanted to mention our free 4-day options challenge course. So this is a free course. You can sign up right here, crush the premium 4-day challenge, and you're going to get every day. You're going to get a class of really lots of value. I have packed a ton of value into these classes to really give you a glimpse at how I look at things from a professional standpoint. Somebody who's been doing this for decades and decades and has really honed his method. This is really something that's going to give you a sneak preview into that. And then, of course, if you want to go further, you can do that. So really, it's all about a number of pillars that we look at that strengthen our conviction, our thesis when we're looking for trade setups. And it's really about option selling with risk. So I know this is something we've been talking about all along. We teach people the MTI indicator in a number of our programs. We have risk gauges in our Discord room. A lot of really risk-based stuff. If you talk to anybody who has known me for years and years, they will say that Hans does not BS you. He talks about risk as well as reward, which you're not going to get anywhere else. Suddenly, everybody is talking about protection again. Suddenly, it's the coolest thing, and we're seeing a lot of experts out there in the area of hedging now, right? All the experts are coming out. And so it's important. People are realizing that it is important again, but it is not easy to do, and you need to find out where to do it properly. So moving on, we've got the S&P 2-hour. Again, these are the spots that we were noticing on the chart earlier. A little bit of trouble through here, as well as a lot of overhang from a gamma standpoint, which we'll talk about in a moment. QQQ was the one that really touched a couple of important spots. The Qs led the sell-off, and then we had that jobs report. We had that the Japanese carry, and so that's what really started to continually unravel the market. But the Qs really led the way down, so they kind of had the leg up in terms of getting to some technical spots a little bit earlier than everybody else. And so here we are with this nice weekly trend line tag, which also happened to be the 50-week moving average as well. So this really was a great spot here to cover shorts and to take some good looking long shots there. QQQ here again, we've got a little bit of a struggle through here. We may not get a lot further through here before we see NVIDIA numbers. I still think Microsoft, a couple other things may remain a little bit tentative to the upside because I do believe that there are a few chinks in the armor there in the AI narrative. Here we've got our VIX. You can see in finer detail here up to about 65. Apparently not really tradable at those levels, but certainly kind of in the 40 to 50 range was tradable from a, not that VIX is ever tradable, but from a VIX product standpoint. And really, apart from this one day where we kind of opened high and then closed on the lows, we really just have taken the volatility air out of the balloon. I mean, they have taken the VIX out to the shed and filled it with lead. It has really been one of the most amazing things. You know, no matter how long you've done this, they always keep throwing amazing things at you that you've never seen before. Here's your 10-year yield coming down, tagging that 130 week moving average, and sort of sitting around here, right? There's no question that yields have been coming down, and this is something that the jury is not 100% out on this, but we could see a little bit of pricing pressure over the next little while. So we might see a little bit of a sort of tug of war going on here over the next 5 or 6 months as people focus on data. Primarily, we have gone from worrying about inflation to worrying about data and the economy. This is the big shift that's happened, and that's why that number a couple of weeks ago really had a big impact on markets. Are we going to see a very big slowdown? Is it going to be a hard landing? Is it going to be more of a soft landing? Is it going to be no landing? We are looking at some fantastic data out there that leads us to believe that it may not be much of a landing at all. So you've got your XLK, again, a spot where maybe you've got a little bit of upside resistance on the XLK, Microsoft and Nvidia being a big part of these two. Move on to SMH. Here's your semiconductor trade. Can get a little bit higher, I think, into kind of like that low 250s area. I think that would make a lot of sense. That would be from a fib standpoint, from a moving average standpoint. I think that's possible. I think there's still a little bit of room given that we're going to be anticipating those Nvidia earnings. Not a ton on the schedule economically, data-wise, but still a few different things here. And of course, there's the big thing coming up. Starting Thursday, we're gonna have this Jackson Hole event, and of course, the headline event within that event is going to be Powell speaking on the Friday. So we need to watch out for that in the morning. Powell's going to be speaking. That has been traditionally, if you look back to 2022, that was a big moment. Jackson Hole was a big moment for markets back then. Things did not turn out well after Jackson Hole. So people are definitely going to be nervous. They're going to be watching for signs of how committed they are to cutting rates and how frequently. So the markets are going to be looking for a little bit of a plot as to how that might look over the next little while. On top of that, we've got some things. We've got home sales. We've got some claims. We've got some PMI prelim numbers as well. So these are important as well, right? We saw services very strong. Manufacturing is still a little bit so-so. But let's talk about some of the data out there. Restaurant bookings, again, released. Fantastic. Daily data for U.S. air travel. No problem. Coming down a little bit seasonally. Makes sense. Does that every year. Still looking great. Daily withheld income tax receipts. Nothing to see here at all. Data still looks very positive for the economy. All this talk of recession, impending recession, is complete and utter garbage. Weekly data for same-store retail sales. No problem. Of course, there are some. We had good Walmart numbers. There have been some bad numbers as well, but there will be different idiosyncratic things going on out there from a company standpoint. Weekly bankruptcy filings, nothing to see here. No problems there. Weekly credit card debt, credit card spending, not a problem. Let's take a look at spending by sector. Nothing to see here. Profit margins. Incredibly important. Why is anyone talking about this? They're talking all about recession, soft landings, maybe hard landings. Are you kidding me? Profit margins, fantastic for companies. Fantastic. Now, I will caveat that with maybe we start to get a little bit of margin compression. I do have a funny feeling that the pricing power that a lot of corporations had within the last 3 or 4 years is something that could wane a little bit. We've had companies sort of being able to really crank up pricing left, right, and center because you know why? Well, haven't you heard there's a lot of inflation out there? Haven't you heard about inflation? It's very high. Sorry, we're going to have to charge you more. That is what companies have been doing. Whether their input costs and all kinds of costs are going up, didn't matter to them. They were taking full advantage of the situation. Plenty of data to show that that was the case. Are consumers pushing back a little bit? Are these companies going to lose some of their license to crank up prices all the time? Okay, that has affected margins. That is one thing that we definitely have to look out for. There could be some margin pressure out there, and that's what's going to make it difficult to invest because you're going to see good themes like an Airbnb, which by all measures should be doing just fine. Hotel data, airport data, restaurant data looks fantastic. Should be a strong business, but margins getting compressed somewhat from capex in other areas of the business. But no doubt about it, there are margins getting compressed. So there is reality, and then there's the stock market. Not always the same thing. We saw Airbnb take a really, really good kicking over the last month. Some names coming out from an earnings standpoint. We've got Palo Alto. I'm definitely watching that one. I own it. We've got Lowe's. That's going to be really important, right? Figuring out what the consumer's doing. We have Target. So definitely a different kind of business from Walmart. Walmart very grocery based. Target a little bit more discretionary based. But discretionary been doing okay lately. So we'll have to see if this follows suit. Zoom, blast from the past. Still important. Snow, another big important name out there on the tech side, software side. TD Bank, not as important from a banking standpoint as the U.S. banks, but Workday, Intuit, another tech name. Peloton, who cares? They have no clue what they're doing anymore. They're in trouble. So let's take a little bit of a deeper dive. So for people who aren't into this kind of stuff, I won't blame you if your eyes start to glaze over a little bit. But from a dealer gamma imbalance standpoint, so what happens, when we were down to 51, 5200, we were talking a lot about how there was negative gamma. And what that means is dealers are short options. Plainly, they're short options, they're short gamma. They're going to exacerbate a daily move because they're scrambling, they're selling into sell-offs, they're buying into rallies, they're pushing things around when they're short gamma. That's the way that the hedging works. Now, we moved up into 5350, 5350, 5400, where I said, listen, we get up into there and we could get a steady melt up, which is what's happened. Because you got out of that negative dealer territory and into more positive dealer territory, which is good, although we did blast up more strongly than I think anyone expected, right? When you're very, very positive dealer flow, very positive dealer gamma, you should have a little bit more of a muted response, but we blasted through. So our upside vol, very, very strong. So what happened? We expected that the Monday, August 5th event was going to be a little bit of a kind of extinction event. Why? Because 2018 was exactly that. You had a lot of people into the short vol game. You had billions and billions of dollars that had moved in from 2017 and especially January 2018. And we had this event that we call Volmageddon now. A lot of people on that short volatility side of the boat, and it tipped over. And we had products like XIV disappear. They had termination clauses that were tripped. They were done. Product gone, right? A product that had been doing well, generally speaking, much of the time, that a lot of people probably put a good chunk of their investment portfolios into, gone, terminated. That's what can happen when you have a truly monumental volatility short squeeze. This past August 5th felt like that. It felt like something like that, but it wasn't in the end. Guess what? Dealer gamma pushed even higher into this particular event. Effectively, vol sellers reloaded. They took advantage And while some came out, it came right back in again, and everyone said, you know what, high vol, let's start crushing again. So unprecedented dealer long gamma is what resulted from that. And what that means is when there's a lot of long gamma, you have very stable and muted markets, technically. So what you had was, instead of short Vega unwinding as we did in 2018, we actually had people adding to short Vega. We had people adding to short Vega. So everyone is really just jumping right back on board. Nobody knows exactly why that happened. We didn't quite get things bad enough to trip some of those sort of termination type events. Some desks definitely suffered. I think there was definitely some pain out there. But it really looks like in the end, people really added to negative Vega and negative gamma. And so what we really have on the ETN side of things is just deeper and deeper and deeper negative Vega positioning. So this trade is just getting bigger and bigger and bigger. We'll see one day. Is that going to make a difference? We shall see. We shall see. So that's it for today. Another thing you can check out, definitely check out my Crush the Premium 4-day challenge, which is a completely free 4-day course that'll get you really, really interested in what we're doing over at Cashflow Insiders and Crush the Premium. And then I have my Flagship Program, which is 5-week mentoring with me starting this Thursday, August 22nd. It's going to be fantastic. We've had students call it extraordinary, rave about it. It is looking at things from a risk reward standpoint, always considering risk. And that is really the way you have to look at this game. Option selling is effectively capturing the VRP, right? It's capturing something called the volatility risk premium. How much are people overpaying for options versus what their underlying risk is? That's that excess that you can take advantage of, that volatility risk premium. But the problem with doing that in single name and index, etc., is that you have strike risk and you have the convexity of short volatility. And so the problem is you need to be able to get out of these positions or adjust them or fix them before things get really, really bad. Because when you're dealing with trades that can make $1 or lose $10, eventually they're going to bite you. And that's what we saw a couple of weeks ago. We saw a lot of people get really, really hurt in short vol trades, short option trades, short put trades. And it can be a very dangerous game. So we teach people how to do things properly, how to set themselves up, how to respect the indicators, etc., and do this the right way. So if you're interested, check it out, cashflowinsiders.com, and we'll see you guys in the next program. Thanks for watching.